Hello, good morning everyone. Hope you had a good night's sleep. Today is Friday. Thank God it's Friday. We've come to the end of the 2-week session. And as usual, we'll just go through the trading plan. It's always the same trading plan. Every day, no change. Always the same trading plan. So we'll start with the economic calendar. Today, Friday, the 21st of January. As usual, we're focused on the Euro-US dollar. So we can see at 9 o'clock, we've got the German business climate report, current assessment, expectations, and all coming out from Germany at 9. But the reports of medium importance, that won't stop us trading, but just be aware that could affect the Euro-US dollar. At 9:30, you have the UK retail sales. Again, report of medium importance. That will have more of an impact on the pound dollar than the Euro-US dollar. But sometimes it could have an effect on the Euro-US dollar. So again, we'll just be aware of that. And that's from Canada. Canadian retail sales at 1:30, but that's sort of concern if you're trading the Canadian dollar. So by and large, there are no reports of high importance to affect our trading today, but we're just going to be aware of these reports of medium importance from Germany. So we'll go ahead and place our trade. We'll start with the 1-year daily chart in terms of looking for swing trade opportunities. So we can see that's the 1-year daily chart. And you can see the market has been trending sideways since December. 1st of December, the market has been going sideways. This is the Euro-US dollar. So it's just been trending sideways. Initially, we draw a high point at the, we draw a line at the high point of the sideways trend there, and then a line at the low point. We can see where it broke that high on the 19th of January and then formed a new high. And we'll see if that high again gets tested again. Again, remember, this is just a high, it's not a resistance in the market, and that's just a low, it's not a support. So from a swing trading point of view, we just have to wait and be patient and see if the market gets to that previous high of 13,538.5. If it gets to that point and it comes back down and that holds, so the market moves up, gets to that high point, pulls back down, then we'll say that that high there is held, and then we can then call it a resistance. But at this time, it's just a high, and that's just a low. So at the moment, the market is trending sideways, and there are no clear swing trading opportunities. So we'll go to our day trading. Again, you can see the chaos in the market. It's trending sideways yesterday. It was all over the place yesterday. But you can see that the first resistance there is higher than the sideways trend. So that's a good place to buy. Just 2 points above the first resistance. Obviously, you can see where the market is now. The market is there. The moving average is there. So we can buy above the market, above the moving average 50. And just above the first resistance at 13,529. And then obviously that's the moving average there. The market is there. We can sell below the market and below the moving average 50, and that's the pivot point. So we'll have a pending sell order just below the pivot point and a pending buy order just above the first resistance. and obviously in between we'll just keep out of the market and keep out of trouble. So those will be our pending orders for today. The other thing you could do, which is sometimes what I do, because we've identified the previous high in the market, looking at the 1-year daily chart, we can make a mark of that on our chart because the previous high was 13,538. 13,538.5. We'll just round that up to 13,539. So we can put a marker there telling us that that's the previous high on the 1-year daily chart. You can put a text, you can write a text on there. Just click on the T. So we can just say, oops, let's just make it bold and big. So you can just say previous high from 1-year daily time frame. So that way you know that if the market breaks that high, again, chances are it might keep going up. Again, there's no guarantee, but it's just good to be aware that that was the previous high. Again, the market could get there and then just come straight back down. If it could, like I say, it could then form a resistance at that point. I mean, from a day trading point of view, we'll still buy 2 points above the first resistance. We'll still have a 20-point stop loss in place. So we're protected anyway from our money management. So the market breaks the first resistance and it keeps going up. It might get there to the previous high and come back down, or it could break through and keep going up. But we'll wait and see. Any questions? If you have any questions, you can click the hand button or send a question through the question box. But I think coming to the end of the 2 weeks and today being Friday, I think the key is remembering the lessons over the 2 weeks is having a trading plan and the consistency. I think that's been the key. You know, you wake up in the morning, assess the market, you know, assess your charts, have a look at the economic calendar, decide where will be the appropriate places to place your pending orders, apply good money management, and you just be consistent. Okay. All right, so if there are no questions, we'll meet again at 12 midday and see what's happened in the market. So I'll just unmute you all out. So have a nice day, everyone, and we'll meet again at 12.
Thank you.
Take care.